Ladies and gentlemen, welcome to today's web seminar. My name is Mike Perkowski, and I am the moderator for our program, Built for Scale, Trusted for Security, Digital Asset Infrastructure for Banks. This program is sponsored by Fireblocks. We appreciate their support. This is the first session of Fireblocks' three-part Banking Bootcamp series, where we're breaking down what banks need to know to confidently build a digital asset strategy. Today's program will explore how blockchain is reshaping financial services and why wallets are becoming the central organizing layer for on-chain value. Be sure to join us again on March 17th, when Fireblocks dives into practical use cases banks can implement, from stablecoin payments to tokenized deposits and beyond. To guide us through this topic, we're pleased to be joined today by Neil Chopra of Fireblocks. Neil, before you begin your presentation, do you take a moment to introduce yourself to the audience and then let's get started?
Yeah, for sure, Mike. Really appreciate American Banker having us and myself back on. I've had a couple of these sessions to date, so really excited to be in front of everyone again today. My name is Neil Chopra. I'm a financial markets economist here at Fireblocks. Really focusing more broadly speaking on financial markets and emerging use cases and how new segments or market participants are stepping in to leverage this technology. I've been at Fireblocks for just over 5 years now. Spent 4 years at Ripple building out digital asset and blockchain-based enterprise payment solutions. And prior to that, I spent 10 years in corporate treasury with a focus on FX, global liquidity management, and cash. So again, really excited to be here, share some insights that we've gleaned over the past 8 years being in the enterprise space. And I think really now at an inflection point where a lot of banks that we speak with are at different places in their digital asset journeys. And so really wanted to take this three-part webinar series and break it down for the audience, talking first about the why and why we're here and really what's happening in the market. The second session and third that'll be hosted by better looking and smarter colleagues than myself will be focused on what banks are doing and then more specifically how they're enabling these solutions leveraging the Fireblocks infrastructure. So with that, again, thank you everyone for joining here in sunny-ish, but certainly warmer New York now, which is great, and anywhere else that anyone is joining us from across the country as well as the world. So really, again, taking a step back, we wanted to sort of share again, what we've seen over the past few years in the banking space. I think a lot of regions globally have really started to accelerate their adoption with more friendly regulatory frameworks to be working within. But with that, I think a lot of people get confused or overwhelmed with what blockchain is and how it can be plugged into existing processes and technology. And really wanted to sort of highlight that this is not new from the banking space. We've seen digital and more specifically technology enable banks to better service their customer base regionally as well as globally. And we can see this from the 1850s and on. A lot of different technologies have really enabled a more digital first user experience. And so what we've now over the past 15 or so years seen is this concept of fintechs, which have stepped in and been able to service some of the lower end of the market from the retail and consumer side. And now with this technology, they are actually enabling these fintechs to produce more financial services or drive more financial products and services to their customer base. And I think it's a really interesting development that is now starting to push banks, especially with regulations in the US, starting to evolve and starting to become more clear in terms of what can and can't be done. But really this unbundling that we've seen in the 2010s and 2020s of fintech stepping in has really, again, given some pause to banks to better understand how they can deliver better, faster, and cheaper to their customer base. And I think over the past 4 or 5 years, the crypto industry in general has probably done a bit of a disservice to the group that's on the line here, because there's been, I will say, a lot of chaos and a lot of, I'll say, market-driven sentiment that has really sort of pushed people into crypto and then conversely also pushed them out. But what we're seeing now is really this inflection point that we're coming up to, which is identifying and really driving towards the utility that this technology can now derive. So as you can see with this chart here, from 2015 on, there was a big spike in this concept of crypto trading and a lot of fintechs, crypto exchanges, and some banks globally looking to offer access to crypto trading and custody solutions to their customers where the demand drove it. What we're now seeing is with stablecoins, tokenized money market funds, and other assets that are coming on chain, that there's a real utility that can be derived by this technology, which takes all of the work done over the decades of driving digital first to now have the back-end infrastructure line up for a more real-time clearing, settlement, and custody of these particular assets that sit underneath the transactions that are executed. A lot of these have really been abstracted away from the end users. And now we're starting to see the market participants stepping in because they're seeing these opportunities to actually drive efficiencies as well as drive new areas of revenue across the institution by stepping into this market. This first concept of utility-driven use cases has really been focused, as you've probably seen and heard in the market, around stablecoins and payments. And what this has really allowed for is a number of non-banking financial institutions to actually step in and take more control and ownership over the infrastructure stack that will allow the payment service providers, crypto natives, and super apps to actually leverage this technology directly, and in some cases and instances, actually wean themselves off of banking services because this concept of blockchain wallet technology allows them to take more control and ownership of the assets on the back end. And I think the really interesting development here has really been the proof points in the market, as you can see across the board here, where more forward-leaning and risk-on institutions are driving the utility use cases that are proving out this technology for the rest of the market. And so this brings us to our first just poll question here, because we really want to make sure that this session and the subsequent ones do provide some more context and honestly education for everyone that's joining to help you better think about how to step in, how does this technology impact. So we'd really love to just hear from the group now in terms of where your institution is currently at in developing a digital asset strategy. Do you have a lead that has been tasked with defining this across the organization? A lot of institutions are also working in larger working groups cross-functionally to really understand the various impacts across the board within the institution and where the different business lines can derive value. So again, would love to hear in this poll question, maybe where your institution is today, and would love to also, as we go through this session, have Q&A, because I don't want to sit here necessarily talking through content and slides. So would love to make this as interactive as possible as well. But again, would love to just posit this poll question here and get some responses. And Mike, not sure if there's anything else that you'd like to add as well.
Okay, great, Neil. I can see from our interactive polling tool that more than half of the audience has already responded to this. So we're just going to give it a few more seconds, give everyone an opportunity to give us your answer to this simple question. Does your organization currently have a digital asset lead and or a working group evaluating and prioritizing use cases? Give us an idea where you are in this journey. Yes, you do have either a digital asset lead or a working group. No, you don't, or one is in progress. All right, so I think we've got critical mass here. So let's take a look. Let's close the poll and let's share the results here. Okay, so Neil, 43%, almost half of the audience, says that there is already somebody or some group in place to evaluate use cases and other options. Another 24% say one is in progress. And 1/3 of the audience says that they haven't begun this journey yet. Does this surprise you at all?
No, honestly, I'll say that this probably does fall in line with a lot of what we're seeing out there in the market. What I will say is over the past couple of months, we've seen certainly an uptick in digital asset strategy leads or working groups being created across banks. And so again, this session here is more of the why or the what is happening out there in the market right now. So do hope that as you start to enable these leads in groups, is that we are a resource here from a Fireblocks perspective to share insights in terms of what we're seeing, and also start to think through where and how different use cases can be applicable to your institution based on your business. We are certainly not, I'll say, the banking experts. You are the experts in your field. What we do is work with you to identify where and how this technology can be applicable to your specific business. So again, Mike, I wouldn't say out of the realm of what we're seeing. Actually, great to hear that there's another quarter that are in progress right now, with about half with an active group. But the ones for the no would love to hear, even in the Q&A, in terms of where and how you're potentially thinking about it. Has this been deprioritized because of other initiatives? But again, this session here hopefully can give a little more context in terms of why it looks as about 2/3 of the group do have active groups looking at and understanding how this is applicable. And I think this slide here is really interesting because this has been a slow evolution, I'll say, over the past 5 to 8 years in terms of the crypto natives and the payment service providers and super apps, or more broadly, the fintechs that are stepping into this space. And what I'll say is, in a lot of ways, squeezing a lot of banks from both sides, because, and we do have a couple of slides that follow this, that talk about what it is they're rolling out that is really focused, I'll say, on the retail or consumer side of the house. But at the same time, a lot of these crypto natives and fintechs are actually starting to move up market now. So it started with payments, let's say 15 years ago, for a more digital first experience. And now a lot of these apps are starting to expand these financial services to really be able to provide more to their users, and more specifically, keeping funds within their ecosystem where they can better monetize. So really a similar playbook to what a lot of banks have done historically, which is take deposits and then learn how to monetize or work with those deposits to offer a broader set of solutions to their customer base. And one of the major things or major themes that we're seeing recently is this concept of trade everything. Again, I wouldn't say that at the top end of the Fortune 100 and multinationals that they're looking for their treasury to jump in and start accessing assets globally and manage a full-on trading portfolio. But what we are seeing is, from a retail and consumer perspective, that a lot of these fintechs are targeting the newer generation who are and have grown up digital first, and can now have a single point of execution for all of their financial lives. And we're not going to get into the detail here, but this is more of just a slide that shows all of the different capabilities that are getting rolled out. We've seen it with stocks and bonds and crypto trading with a lot of these fintechs. They're expanding into borrowing and lending. And I've heard, I know out in the market, I'm sure a lot of people have heard about perps trading and prediction markets and tokenized stocks, which, while they are not fully scaled in any way, shape, or form today, all of the pieces and the infrastructure are being put in place to enable this full stack for trading. And I think the really interesting piece from a regulatory perspective that we're seeing now is, with Genius now thankfully behind us, moving on to the Clarity Act, is that once we do start to get some progress with the Clarity Act and starting to get more structure from how traditional market participants can step into this market, is that will certainly look to open up the floodgates for a lot of different applications. And can't have a webinar, can't have a session, obviously, without mentioning AI. The one parallel that I will draw here is that from a crypto perspective, we went through this tokenize everything moment a few years ago. A lot of hype and narrative surrounding what this technology could and could not do. We've sort of waded through those waters, I'd say, and you can see on the right-hand side here a number of applications and use cases that are starting to scale if they have not already. This concept of AI and going through its hype cycle and AI everything, I think, will come and go. And what we will see are real world applications for AI. And I think the really interesting convergence point for these is that if you have things running on AI, they cannot necessarily scale without blockchain and wallets on the back end. And so as institutions start to think about their blockchain strategy and may already have some form of AI strategy, I think also looking outward into the market and what a lot of these newer competitors like fintechs are building out will be things that banks will need to compete on in the future. I can't say that this future is going to be 6 months from now or 6 years from now, but really what we are now is more of the planning and strategy phases for a lot of the second movers, we'll say, where we've seen a lot of the first movers starting to move into production and scale across a number of these applications. And again, just bringing this back to from more of a banking perspective, why the time is now. We're seeing the utility being proven. We're seeing the security and scalability of this technology that is being driven by the innovators. And we're now starting to get the regulatory clarity and market traction, specifically, again, around stablecoins and proving that value that blockchain can bring on the back end that can allow a lot of these institutions to deliver better, faster, and cheaper for their particular end users and customers. So a really exciting time. We will certainly in the follow-up sessions dive deeper into the specific use cases and how banks are evaluating and ultimately standing up these use cases from both a business and a technology perspective. But ultimately, the first decision needs to come from the executive level to say that this is truly impactful to our business, and we are seeing impacts to the business, both positive and negative. We're seeing crypto brokerage, and a lot of the institutions that have actually stood this up are seeing a massive amount of gains, not only from just the crypto trading side of the house, but then the ability to cross-sell and have them involved in other financial services and products that they're delivering. A lot of these clients are moving off of banks to fintechs or moving parts of their portfolios over to fintechs because they're able to achieve this better, faster, cheaper outcome. And again, this trade everything in one place concept. And with that, we're starting to see non-money assets moving on chain. Tokenized money market funds, stocks and equities. We're starting to see private markets moving in from a credit and securities perspective as well. So again, just a really interesting inflection point. And I think this has really been the past 10 years of enterprise blockchain engagement with the broad market, with a lot of the first movers and innovators starting to execute at scale in production. And this is not specific to fintechs and crypto natives. You'll see here a sampling of a number of traditional institutions that have stepped in, from global financial institutions like Revolut Fintechs, Bank of New York, which is the oldest and one of the largest custodians in the world, expanding their existing services to incorporate crypto and digital assets. Regional leaders like Nubank, who are doing some very exciting things from an expansion perspective now as well, moving from a very Brazil and LATAM focus to a broader set of regions globally. And then, of course, digital asset banks and banking as a service, which I think is a fundamental layer that is required to allow a lot of the mid market and I'll say the lower end of the top market to move, where maybe they're not at the top end necessarily ready to execute directly themselves. And so a really, really interesting and exciting time again, because we're starting to see this scaling in the market. And the first thing that a bank needs to look at is what is going to be relevant for me, not just today, but over the next 3 to 5 years. And I think what we've historically seen is a lot of institutions saying, I need to find the one revenue driving use case today before I will make a move and execute on an initiative. And again, going back to the first poll question that we had, which was, is there a digital asset lead or working group? Understanding these use cases and these applications is critical. And further to that, understanding how they impact your particular business line, your particular market segments or customer segments is just as critical. So we aren't going out there and saying everybody needs to launch a crypto brokerage business tomorrow, because we know that that's not feasible and we know that it's not applicable to everyone's customer base. But what we can say is that no matter what, as assets move on chain, which all signs seem to be pointing to that starting to scale, is that back end or underlying infrastructure to be able to support this technology and these assets is critical. And that's really, from a Fireblocks perspective, what we have been seeing in terms of what is relevant to the bank. We don't want to force anyone to do something that they are not comfortable with or is not applicable to their business. But that is where Fireblocks, from an infrastructure and platform perspective, is truly use case agnostic. Whatever is relevant to your business, however this needs to plug into your existing core banking systems, user interfaces, and user experiences, is up to you. You are banking that end user. We are then the back end infrastructure that is enabling you as that institution to deliver these various products and services. So again, a sampling of some of the assets here on this, some of the use cases here on this slide, where we're seeing banks start to adopt into production and scale, and likely probably the first initial use cases that a lot of the folks on the line will likely be engaging in as well. So again, bringing us to the second poll question here, Mike, I'll hand it over to you in terms of where some of the specific use cases and maybe market segments that the audience is engaging in today.
Great, thank you, Neil. So, ladies and gentlemen, this is the second interactive polling question, and on these you can provide us with multiple answers. So the question is, have you seen client demand for digital asset products or services? If so, in which segments? So you can select any and all here that apply. So those segments would include retail banking, wealth and private banking, transaction and commercial banking, or institutional and security services. And of course, if you haven't seen any, you can click on none as well. Okay, so again, you can select with any or all of these that you have seen where we've seen client demand for digital asset products or services. All right, we're just going to give our audience another 10, 15 seconds to register your votes. And then we will close the poll, share the results. Neil, I'm going to throw it to you to just get your takeaway on how you see the different markets where this is showing up and whether you see any others that are look particularly active. Okay.
Yeah. Maybe before we get to the polling, hopefully I don't jinx myself here. But I will say that the most noise is probably being made on the retail side of the house. And that being said, transaction and commercial banking, especially from I'll say, a stablecoin and payments perspective, I would hope and assume is also seeing an uptick in demand and questions being asked. But maybe with that, we'll see how wrong I am here.
Well, let's see. Maybe you're clairvoyant here. So let's take a look at what the audience says. Okay, well, it's very evenly distributed, a quarter or close to a quarter for transaction and commercial banking, retail banking, and wealth and private banking. Okay, so it's pretty widely distributed here.
Yeah, and again, I would say nothing really surprising here to me. I will say institutional and security services, depending on sort of the cross section of folks that we have on the line, that's not necessarily a business that's across a large swath of banks. I would say that is probably concentrated more at the top end of the market with a select few. But wealth and private banking, certainly seeing some engagement there, especially around existing customers who may hold crypto and simply want their bank to be able to support the ability to hold those assets, and then hopefully in the future starting to see an uptick in the ability to be able to lend against crypto and digital assets as well. So again, I think this is a great response rate here in terms of the breakdown, because again, going back to one of the things I had said earlier, where historically a lot of banks have said we need that one revenue driving use case to start with. Typically, it's difficult to find within a specific customer segment. And so what they are seeing are across multiple business lines, the demand starting to pick up. And so understanding that there are applications across the bank here, you may have product owners sitting in each segment who need to distill down and understand where the relevance is for that particular business. But then this digital asset working group really coming together to understand the broader impacts across the organization to then make decisions at the bank level versus maybe more of the business line level, which is where I think we've seen a lot of institutions, I don't want to say struggle, but really collect that data and action on it. And so from that perspective, again, I would say pretty evenly across all of those different market segments customer segments, which is what we typically see, right? Is there's broad applications of this technology, again, started with crypto trading, but now we are seeing a broadening out of these utility use cases as well. And I will say from a Fireblocks perspective, being here since the beginning of 2021, it's been really interesting to see the evolution of the market and really how Fireblocks has sort of found product market fit as the market continues to evolve. So I'll just spend about 30 seconds on this slide and take you on the Fireblocks journey since coming out of stealth in 2016, 2017, where product market fit sat with the market makers and OTC desks in crypto trading. Believe it or not, back then, a lot of them were managing operations through USB devices and ledgers because there was no institutional grade security or infrastructure available to them. And so Fireblocks really stepped in and provided that infrastructure for post-trade clearing and settlement in a secure and efficient way. Market makers and OTC desks were then connecting to exchanges who are looking for that liquidity to offer crypto trading to their client base. And again, similar to the market makers and OTC desks, the exchanges also did not have enterprise grade or institutional infrastructure to support the custody and settlement of these particular assets. And so Fireblocks expanded into crypto exchanges. And then as crypto exchanges started to make money off of crypto trading, we saw fintechs and neobanks saying, hey, what about us? And so they were looking to launch their own crypto brokerage services and businesses, which have scaled pretty materially over the past 3 to 4 years. And then the shift from the crypto-driven market use cases to the utility use cases and payment service providers stepping in to leverage stablecoins as a form of payment. And more specifically, stablecoins as a form of global liquidity management. Because if you can now use a stablecoin and in real time transfer that value from wallet A to wallet B to fulfill a payment, you now have the underlying infrastructure for real-time settlement that can be applied to a stablecoin, a money market fund, or a private asset. And so again, the stablecoin use case, because there's product market fit and there are institutions that are scaling stablecoins from a liquidity management and payments perspective, is really, again, proving that fundamental underlying infrastructure and technology stack that we're now seeing other assets starting to plug into. And this is where banks and custodians being able to extend their traditional custody offerings to crypto and digital assets, tokenization and asset issuance, as well as potentially tokenized deposits and stablecoin issuances coming directly from banks. And this is, again, very much in line with what we're seeing with Genius, the Clarity Act, and hopefully other regulations to come, as the regulators and the broader market acknowledge that there truly is an evolutionary impact to this or for this technology to the end users. We're also starting to see some other segments stepping in. Asset managers, I'm sure everyone has heard of BlackRock and Franklin Templeton, as well as dozens of others who have issued funds on chain. Official institutions and regulatory bodies who have been doing pilots around stablecoins, tokenized deposits, and CBDCs globally, as well as larger enterprises who are looking at this from a stablecoin payouts perspective, Web3 experiences, and what we saw a couple of years ago around NFT loyalty programs. So again, starting to more early stages play around with this technology in the enterprise space, but we are starting to see the scaling happening with the banks and custodians in a lot of different jurisdictions as well. And on that note, Fireblocks today is supporting 95 banks globally. And again, you can see from 2020 on, we're starting to now see that hockey stick curve of adoption and acceleration of the market, because there's a lot more clarity in terms of what banks can and can't do from a regulatory perspective. But I would say more importantly, the actual utility and where and how this plugs into your existing infrastructure, technology, and processes is becoming a lot more clear. And so when we look at a bank, there's of course a number of different business lines. And this again is more of a sampling of the various use cases that we're seeing launched at banks globally. And again, not saying that you have to start with all of these or really any of these, but understanding that this technology getting plugged in at the core and the center of this is driven by the wallet where the assets are being held. And I think this is a bit of a different shift in terms of how institutions have typically looked at monetization. Digital has driven users to a more digital first experience, and owning the UI has historically meant owning the customer. When it comes to blockchain, the owner of the customer and the owner of that data is actually the owner of the wallet. All of the actions that are executed from that particular wallet are governed and owned by the institution who controls that wallet. And so this is where we're seeing, again, applicability across various business lines and use cases. But from a Fireblocks perspective, having that use case agnostic infrastructure is critical as we engage with banks, because we know that the first use case is not the only one. And the first use case may not be the primary revenue driving one over the next 5 years, but that first use case is understanding what is applicable to your clients today, what is applicable to your business today, and then building out a strategy and roadmap beyond that. And so when we talk about this monetization concept, it's really, I would say, two or three different use cases that are truly scaling today. The first, of course, is asset custody and trading and brokerage. That is where the crypto exchanges, the neobanks and fintechs, and a number of banks globally have started their journey. But again, seeing stable coins getting adopted in the market, the utility being proven, is now driving, we're seeing more demand from banking clients to ask questions around where and how their institutions can better support them today. There are also, of course, asset issuance or tokenization use cases. I will say those are probably a little earlier on than where we are with the rest of the market and the use cases that I had mentioned, but a lot of exciting developments that are happening here. And again, I think with the Clarity Act, hopefully moving forward in the near future, we will actually start to see market structure evolve more definitively around where and how these assets can be leveraged. But I'll point to the bottom layer here again, the ownership and control of that wallet. I'm pointing to my slide here, like you guys can see it. But the core being the wallet infrastructure that then easily plugs in and integrates into the existing technology and processes at a bank. And so based on that sampling, would love to hear what some of the use cases that have popped up from clients or in internal discussions have been relevant. And I know there's some Q&A as well. I did promise that I would get to that. So maybe, Mike, I'll hand it over to you for a sec. I'll scroll through here and see if there's maybe anything we can answer here before getting to the next poll.
Okay, very good, Neil. So ladies and gentlemen, this is our third one. Again, you can select multiple options here in your answer. The question is, what are the most relevant use cases applicable to your business? And some of those options would be crypto brokerage and custody, stablecoin payments, tokenization, crypto-backed lending, or some other. So again, you can select multiple use cases here that your organization believes are the most relevant use cases that are applicable to your business. And obviously, this is going to change and evolve. It has to, sort of the nature of the beast, right? Over the next couple of years. I suspect if we come back 6 months from now, or certainly a year from now, your answers may be significantly different, or certainly significantly more diverse. Okay, we're doing well here. We're seeing a lot of people have already submitted votes, which is great. We're going to go for another 10, 15 seconds, give everybody an opportunity to select the use cases that are most relevant to your business. And we'll close the voting and share with the audience, and then continue with the rest of our program. Okay, let's move on and see what the answer looks like. Fantastic. Number one, with basically a tie, is tokenization and stablecoin payments. Neil, surprise you at all, or what you expected?
A bit surprising on the tokenization side, I'll say. The reason being is that I do fundamentally believe that tokenization, and specifically tokenized deposits, in the short and medium term will ultimately be the backbone infrastructure that all banks need. It is, I think, difficult, and again, going back to what I had mentioned earlier from the revenue driving aspect of these initiatives, to tokenize a deposit does not necessarily drive new revenues to the bank, which is why it's a bit of a sticking point as an initial use case. That being said, I do truly believe that fundamental underlying infrastructure, the ability for your bank to interact with digital assets more broadly, will require that backbone of tokenized deposits. Stablecoin payments and on and off ramps, not surprising at all. What might be surprising is actually that it's not a higher percentage, because I will say that is where a lot of the utility and scaling is occurring today. And so really excited to see that. Crypto brokerage and custody, again, I wouldn't say that there's hundreds of banks out there that offer brokerage products today. And so that's really been, I would say, a sticking point for a lot of institutions to say, if I don't run any sort of brokerage or trading platform today, what is the lift and effort to launch that with crypto. And so again, nothing out of the ordinary, but really exciting to see. I do truly believe that tokenization will fundamentally change how financial markets operate, and that back-end infrastructure will be critical for every bank to be able to engage in those markets. And so the way that the audience is thinking about this is certainly very aligned, I'd say, with what we're seeing in the market. And it's really a question of what does it take internally at the bank to get buy-in and approval to execute on this as the first use case. And so I think that's a great segue actually into what to think about from a strategy perspective and how to look to execute against that. And so again, this is just a sampling of the various use cases, the simplicity, and as well as the maturity. Crypto brokerage up here as a first priority. We'll say the simplicity, and why it's high on the simplicity side right now is if you already have brokerage, extending that to incorporate crypto is relatively straightforward. And then from a custody perspective, again, expanding an existing business to incorporate digital assets and blockchain is much easier than it is to launch a brand new product or service. And so, again, these are just some of the considerations that we engage with banks on in terms of evaluating and prioritizing use cases, and then really building out what that roadmap should look like for your particular institution. And so on that note, really just focusing in more specifically, and again, in the follow-on sessions, we're going to have a deep dive into use cases, more specifically how banks should be thinking about applying those use cases to their particular business. And then the session after that will be more ingrained into the how you look to launch these products. And this is really just a high level how and where Fireblocks sits, or really any wallet infrastructure sits for these types of use cases. And so again, highlighting here that it's really you as the bank own the UI and the UX. You own the customer. You then have an existing core banking architecture and infrastructure. And what Fireblocks has done is really built an API first layer or platform and infrastructure that integrates directly into your existing technologies and processes. So rather than having to build out key management and wallets directly, rather than having to build out all of the governance layers and the workflows and security rights and roles for accessing these assets that sit in wallets, Fireblocks is providing that infrastructure. And then we work with you to really understand where and how this needs to plug in to enable all of these different use cases. And as Mike so eloquently said, maybe not the use cases that we'll see in 2 years from now. It'll hopefully be a much wider set of those use cases. But the recurring theme here is that at this bottom infrastructure layer, the requirement to be able to control and manage your client wallets so that you as the institution, you as the regulated product and service offerer of these particular solutions has full control and ownership of that technology stack. And so this is just a sort of high level overview of how we've really seen banks engaging and building, launching, and scaling in production. And that first step, again, use case prioritization. It's why we had asked earlier on, where are you seeing or hearing the client demand? What are the market segments or customer segments that are asking for stable coins or crypto trading or lending? Because that allows and enables your institution to really map where the revenue is. Where's the business opportunity for you that can then go into, okay, here's all of the applicable use cases. How do we now engage to prioritize what we should launch first? And then ensuring that at the executive level and the C-suite, that there is top-down commitment to execute in this. Again, back to the earlier part of the presentation where we were just talking about this broad transformational shift that's occurring from a technology perspective. I do think we're starting to see executives and C-level individuals stepping in to say, we, from a bank perspective, need a strategy for blockchain similar to a strategy for AI and any other emerging technology, because this truly is existential to our business. And when I say existential, I don't mean in a bad way, certainly in a good way, because I think this does unlock and open up a lot of new opportunities for banking, because it does allow you to really expand the products, services, and solution sets that you can ultimately deliver to your clients. And so, again, looking at what it is you want to launch, once you have that prioritization and that strategy in place internally, it's then understanding, how do I go about doing this? How do I define the scope of a pilot? Do I incorporate a handful of existing customers who have asked for this that can now be a part of this initial pilot product or solution set that we're building towards? And then how do I move that into a broader production-ready, scalable product and service offering that I can now deliver to all of my clients? And then a step 4 is taking that use case and ultimately then expanding it out across multiple business lines, as well as additional use cases that you deem applicable to your business. And in terms of the stakeholders and why I'd referenced a broader digital asset working group, I think the critical piece here is not to forget anyone on the way. I know we talk a lot about the business use cases and stakeholders that are involved in that decision making from a technology and security perspective, ensuring that those leaders are engaged and understanding where and how this gets plugged in. But there are also, of course, risk, compliance, and regulatory considerations across the board. And those stakeholders should certainly be involved in the ideation and initial mapping and prioritization of use cases, because to be perfectly honest, they will be the ones that will say or will determine a lot of the timeline in terms of when and how the bank can actually launch some of these products and services. And so I would say that that is probably the longest pole in the tent, is really rallying the institution around what to do and how to do it. And a lot of times I think there's people out there that say blockchain is very complex. The security side of wallets and key management is overly complex. We don't know how to manage that. That's exactly what Fireblocks has alleviated. What we've done is really abstracted away all of the complexity associated with private keys, wallets, and interacting with the blockchain, so that our customers, because we are B2B, can focus on building the user-facing products and services. And so it's really, really exciting, again, to see the acknowledgement from the market that this technology is impactful. We are seeing the utility of this technology applying to stablecoins and payments. And as the market continues to evolve, as the innovators continue to build, and we support those innovators continuing to build a lot of these new age digital products, all of those features, functionalities, and ultimately market structure will then be available to the rest of the market as well. And so also looking at this from a launch perspective, I think it really is important to consider what the toll gates and milestones are for the bank to launch something in even a pilot environment. And so if we look at where we are today, sort of end of Q1 coming into Q2, is that we would love to work with institutions across the globe in terms of defining what that roadmap looks like, so that we can target end of this year, early next year, to launch that initial infrastructure integrated into core banking that provides a new product or service that the bank can deliver to your end users and customers. Because if the last year is any indication, I think the next year is going to show a lot more innovation. And I think there's going to be a lot more applicable use cases if we were to come on next year and have these same poll questions, but with a lot more categories and use cases for applicability. So again, looking at more broadly speaking, this pilot initiative that a lot of institutions are starting the journey on now is to really distill down what is critical to the bank, and then understanding for your institution specifically what does need to get done in order to get approval to move forward with this initiative or product, and then who needs to be involved in the journey in terms of defining the requirements, understanding the integration, and then ultimately what that end user experience is going to look like.